A very good morning and good evening to all of you, and thank you for joining us today for the Dr. Reddy's earnings conference call for the second quarter ended 30th September 2018. Earlier during the day, we have released our results and the same are also posted on our website. We are conducting a live webcast of this call and the transcript shall be made available on our website soon. All the discussion and analysis of this call will be based on the IFRS consolidated financial statements. To discuss the business performance and outlook, we have the leadership team of Dr. Reddy's comprising Mr. Erez Israeli, our COO, Mr. Soumen Chakravarti, our CFO, Mr. Anil Namboodiripad, who heads our proprietary products business, and the investor relations team. Please note that today's call is a copyrighted material of Dr. Reddy's and cannot be rebroadcasted or attributed in press or media outlets without the company's express written consent. Before I proceed with the call, I would like to remind everyone that the safe harbor language contained in today's press release also pertains to this conference call. So now I hand over the call to Mr. Soumen Chakravarti, our CFO. Over to you, sir.
Thank you, Sanap. Greetings to everyone. I am pleased to inform that our financial performance for the current quarter shows an improvement over both year-on-year and sequential quarter basis. Let me take you through the key financial highlights. For this section, all the amounts are translated into US dollar at the convenient translation rate of rupees 72.54, which is the rate as of 28 September 2018. Consolidated revenues for the quarter are rupees 3,798 crores, that is $524 million, and grew 7% year-on-year and 2% on a sequential basis. Despite the pricing pressure in some of our key products in US arising out of incremental competition and the lack of contribution from G-Suboxone, we were able to record marginal growth on the back of performance led by the branded generics market and a favorable currency environment. Consolidated gross profit margin for the quarter is 55%, registering a sequential decline of 70 basis points, normalizing the contribution from Suboxone in Q1. There is a marginal increase backed by improved contribution from branded generics market and favorable currency after absorbing the impact of price erosion. Gross margin for global generics and PASI were at 59.3% and 28.1% respectively. The SG&A spend for the quarter is rupees 1,237 crores, that is $171 million, with a sequential quarter increase of 2% and a year-on-year increase of 12%. Sequentially, after normalizing for the impact of Forex-related increases, salary increments, and other inflation-linked incremental spends, we were able to achieve reduction in the spends in line with expectations. R&D spend for the quarter is rupees 412 crores, that is $57 million, which is largely at similar spend level compared to both year-on-year and sequential quarter. As a percentage to sale, it is 10.8%, which is lower than the trend of last few quarters. However, the R&D spend in H2 is expected to increase, and overall it should be within the level as in the preceding year. On the cost rationalization side, we feel good about the progress made to optimize our spend productivity and building higher cost consciousness across the organization. In line with our intentions, during the quarter, we have concluded the sale of our antibiotic manufacturing facility in Bristol, USA, and select brand divestments. Further, during October, we have entered into a definitive agreement towards divestment of our API manufacturing facility at JD Metla, Hyderabad. We believe these efforts would help us in improving our asset utilizations and manage our cost structure better. Other income includes gain of rupees 46 crores on account of sale of rights relating to Clodam brand, including its authorized generic, and profit on sale of antibiotic manufacturing facility in Bristol, US. The EBITDA for the quarter stands at rupees 865 crores, that is $119 million, which is around 22.8% of the revenues. The effective tax rate for the quarter is around 12.8%. But for the full year, it is expected to be around 20%. EPS for the quarter is rupees 30.31. Operating working capital, when normalized for the forex translation adjustment, decreased by around $29 million during the quarter. We invested only $19 million towards capital investment in this quarter. The free cash flow generated during this quarter was $131 million. So our net debt equity ratio has improved to 0.26 as on 30th September 2018, even after dividend payout during this quarter. Foreign currency cash flow hedges for the next 6 months in the form of derivatives for US dollars are approximately $240 million, largely hedged around the range of rupees 67.4 to rupees 71.4 to the dollar. In addition, we have balance sheet hedges of $272 million. We also have foreign currency cash flow hedges of 1010 million ruble at the rate of rupees 1.12 to the rubles, maturing over next 6 months. With these, I now request Reddy to take the key business highlights.
Thank you, Showman. Greeting to all. Thank you for attending this earnings conference call. Let me begin with the current quarter performance update. It has been a good quarter for us with a strong all-around performance across key businesses. At an overall level, we have seen recovery on sequential basis, particularly across our branded generics markets and our operations. Please note that all references to numbers are in respective local currencies. Our North America generics revenue for the quarters are at $207 million, registered a sequential decline of about 13% and year-on-year decline of 6%. Adjusting for the sales of G-Suboxone film in the first quarter, the sequential decline is a mid-single digit and is broadly in line with our expectations. During the quarter, we did not have a significant launch, and the business continued to witness increased competitive price pressures across some of our key products, including but not limited to metoprolol, decitabine, and palonosterone. Overall, after normalizing the hit of such transition products, we have not witnessed major shift in price erosion trends relatively to earlier quarters, and overall base business has been fairly steady. Let me also provide a quick update on 3 key products, G-Suboxone, G-Novaring, and G-Copaxone. On G-Suboxone, the Court of Appeals for the Federal Circuit held its hearing on 4th of October, and we await court's ruling in this matter. On G-Novaring, we have comprehensively responded to the agency. Agency has granted priority review status for this application. We continue to remain optimistic about potential approval and launch for this critical asset in the first half of calendar 2019. On G-Suboxone, on Copaxone, we have comprehensively responded to the agency on CRL for the DMF and also our ANDA. We continue to gear up towards potential approvals and launch around the second half of calendar 2019. For both the above products, there may be additional queries from the agency as part of response review process. We remain committed to actively engage with the agency to work toward faster conclusion. Overall, new launches run rate has been fairly healthy, and even within the month of October, as of date, we have already launched 4 products. We expect the momentum to further accelerate through the rest of the year with 10 to 15 launches lined up, including some exciting limited competition opportunities. Our Europe business recorded sales of €23 million with a sequential decline of 7%. This decline is primarily on account of negative price erosion impact on few of our key products. We expect the performance in the second half of the fiscal year to improve on the back of new product launches and stabilization of supplies to the market. Our emerging markets business performance has been consistently improving, registering a strong year-on-year growth of 36% and sequential growth of 13%. The sequential growth is primarily on the back of improved volume offtake in our existing market and scale up in our new markets. Following the first quarter recovery in Russia, the team has done well in sustaining performance momentum in the second quarter. Overall, we remain optimistic toward delivering healthy double-digit growth for this business in fiscal 2019. Our India business revenue are 686 crores, with year-on-year growth of 8% and sequential growth of 13%. We are very excited with the traction witnessed in the launch of Hervista Trastuzumab, a biosimilar of Roche Herceptin in the domestic market. We are quite optimistic of growing our India business double digits for fiscal 2019. ECII business revenues are $87 million and have largely been in line with our expectations. As mentioned earlier, we continue to focus on re-energizing this legacy business and regain global leadership. On the biologic side, recently you have seen the press release by our partner, Fresenius Kabi, on our pegfilgrastim biosimilar candidate meeting all the primary endpoints in 2 pivotal clinical studies. We are very happy with this positive development, and we will continue to work closely with Fresenius Kabi toward eventual filing and approval in the US and Europe. On our proprietary products business, we have been granted PDUFA date for DFN-02 in January 2019. Pre-launch preparations are ongoing, and we expect to launch the product in Q1 FY20. On the commercial side, we are continuing to see an increase in prescriber base and volumes for our lead neurologist product, Zemras. We saw a decline in volumes for Cernivo over the previous quarter, mainly due to a suboptimal coverage and seasonality in the category. However, with improved access from CVS Caremark coverage starting Q4 and changes to a copay program, we should see volumes and net revenue grow consistently. Further, we divested Cloderm in Q2 with a view to optimize our steroid product basket. As a result, increased sales force focus on the other products should yield growth across the derma portfolio. Progress on our key R&D programs is on track. On the 2 warning letters affected sites, currently the sterile injectable facility in Duvada is undergoing inspection by the US FDA. Since the audit is ongoing, we will not be able to comment on it until the conclusion of this audit. On Srikakulam plant, as committed, we provided our response to the agency, and as part of the review of the response, we have received certain follow-on queries which we plan to respond back within the coming months. We continue to engage actively with the agency to ensure concluding the issues at the earliest. Please let me make a few minutes to provide you with a quick update on the company-wide strategy planning we have been working on over the last couple of months. In the coming years, the company will focus on growing its profit derived from the 5 key spaces, namely US, India, Russia, China, and API. For the US generics market, the key focus will be to leverage our improved cost structure, leverage the depth and the breadth of the portfolio within over 110 pending ANDAs accumulated over the years to significantly enhance our offering to customers. For India branded generic market, we plan to leverage our brand equity to further strengthen our existing brands and focus on new brands in selected therapeutic areas. For Russia, we plan to leverage our existing brands, work on their life cycle management, and also build new brands in selected therapeutic areas, including new therapeutic areas. For China, we plan to leverage our global portfolio to expand our presence in the market in light of the recent changes in the Chinese market. For our API business, we plan to leverage science capability, our cost structure in India, and our access to intermediates to gain global leadership. Businesses such as biologics, proprietary products, and origin will continue to be drivers for future growth. We will work on ways to ensure that they are financially self-sufficient over a period of time. Multiple initiatives are being undertaken with high focus on product launches, cost efficiency, and superb execution to support growth across key businesses. Having spent more than 6 months now in the organization, I feel really excited about the growth opportunities available for key businesses ahead of us. Good performance for the current quarter has been a result of our ongoing efforts on profit growth as well as improving the productivity levels. It is a journey, and we will continue to build on it for a sustainable growth for the company. And with it, I would like to open the floor for questions and answers.
Sure, thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Aditya Khemka from DSP Mutual Fund. Please go ahead.
Yeah, hi. Good evening, everyone, and thanks for taking my question. So, first question on the 2 plants, Duvada and Srikakulam. So now that, the inspection is undergoing on Duvada and Srikakulam, we have received follow-on queries. Can you comment on how many ANDAs are dependent on the clearance of these 2 plants and how many are de-risked by transferring to other facilities?
So, exact number will be difficult to give straight away, but it will be around, say, 15 to 20 we can expect over a period of time.
So these 15 to 20 ANDAs out of the 110 which are pending approval are from these plants. Is that the correct assessment?
Rough. We can get back to with the precise number.
Yes, some of them we have risk mitigation.
Right.
And if we will be able to launch from this plan, naturally it will be better profitability as naturally it's our own cost and we are not sharing the profit with others.
Fair enough. And secondly, on the R&D spend, so can you comment on the split of the R&D spend between generics and our non-generic ventures like innovation, biosimilars, 505(b)(2), etc.?
Till date, our ratio remains unchanged. That means roughly 60% will be on API and generics, and remaining 40% over proprietary products, biosimilar and origin. In that order, even more on proprietary products than biosimilar and very less on origin. But going forward, this ratio will change as I spoke earlier. So that 60% will come down and the other part will increase. But that will happen over a period of time, not as a step jump.
All right. And lastly, if I may, on the India business side, so we have seen 8% year-over-year growth, which seems to be quite good actually given the base of previous year. So what is the aspiration here? You think we will be able to grow consistently on a double-digit basis in India? Is that a fair argument?
In terms of aspiration, yes. We'll have to see every quarter how we are growing. Over the recent time, we are catching up in terms of our growth in line with the industry. So our aspiration will be to beat the industry. So let's hope, cannot commit.
All right, sir. I have more questions. I'll get back in the queue.
Thank you. The next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, good evening and thanks for the opportunity. My first question is on the launch guidance that has been given about 10 to 12 more over the last 6 months. Did I hear that correct? And this is coming from the non-affected facilities. Just wanted to check, or we are assuming a couple of facilities to come back operational?
So this is unrelated to the facilities because we cannot commit yet when we will have it. Naturally, we hope that this will be soon, then the numbers can increase.
So you're looking at 10 to 15 for the remaining 6 months, and you already launched, if I heard it right, 12. So total about 20 to 25 for the year.
Just want to make sure what we said is that we launched in this quarter about three products. In October, we launched 4, and additional 10 to 15 products remain till the end of this fiscal.
Understood. Fair enough. Thank you for clarifying. Secondly, you mentioned on the Suboxone case that, it's weighted. So just wanted to hear some, what could be the possible scenarios here? If you could help us on that.
There are actually 2 scenarios, one that we will win and one that we will lose. If we will lose, so if we will win, naturally we will launch our product, relaunch our product. If we will lose, we will have to continue to be injected until there is a resolution of the patent case.
So I was just trying to understand the competitive landscape actually. So if you win and continue to sell, if you can start selling again, can the competition, the other guys settled and other in the race can also come in? I just wanted some color there, please.
I cannot speculate on other people's behavior because I don't know the nature of their agreements or disagreements with the innovator.
Okay, fair enough. And lastly, on the non-core, disposals that you have taken initiative. So just wanted to understand how much more is there in terms of, creating a more profitable organization. Do we see this activities on an ongoing basis for the next 6-12 months, or we are largely done?
In terms of manufacturing site, we are in the process of let's call it rationalization of our network. I do not expect a near-term additional activities. On products and brands, absolutely this will continue.
Okay, great. Thank you, and I'll join back.
Thank you. Before we take the next question, we'd like to inform participants that in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Neha Manpuria from JP Morgan. Please go ahead.
Thank you for taking my question. First, on if I look at your SG&A spend, adjusted for the increase in employee, it does not seem to be showing too much improvement from the cost optimization that we are talking about. So you did mention in your opening comments that we have seen a decrease in cost. Could you give us some clarity on how much that has been, and on some number around what we are expecting out of cost saving over the next year?
Yep. As we told during the last IR call, that we actually has affected the increment during this quarter only. So this quarter we have got the effect of the increment. So if we take into that, and also because of the rupee depreciation, some of our manpower cost, which will be there in overseas, so those costs goes up. And if you normalize the impact of that, and the normal inflation-linked incremental spend, then the kind of reduction in the spends that we have is completely in line with our expectations.
And do we have any sort of number? Let's say that X amount is what we are looking to save.
No, we can't give further breakup or further guidance. But all we can say is that we are continuing to focus on cost improvement and productivity improvement, and we are seeing results of that you can see is reflected in our overall EBITDA margin.
Understood. And so on the U.S. business, you mentioned that we have over 100 products in the pipeline. Excluding the 3 products that we have discussed, what would be your estimate of meaningful products that we can expect from the pipeline over the next 2 to 3 years?
So we are not giving guidance, and it's also very hard to predict the value of a product because, as we know well, product will go down in pricing 60% or 80% or 40%. And also it's hard to predict market share. But let's say that in those 100 pending handles, we have some very, very exciting products and some that we probably will have exclusivity. So overall, we feel that it's a very healthy portfolio.
Okay. And my last question is on Russia. That business seems to be doing particularly well over the last 2 quarters. Is this this improvement linked to the biosimilars tender and therefore could be lumpy, or is this a sustained base of improvement that we should assume for the Russia business?
Biosimilar will be lumpy because it will be this out of the tender outcome. But and also in Russia there is a seasonal impact which happens, and it all depends on when the winter sets in, and that cannot be very predictable given the whole global climate. So to that extent, there is a little bit of unpredictability or some fluctuation. But overall, based on new product launches and tractions in Russia market, we are seeing healthy performance in Russia. But beyond Russia, if you really look at overall emerging markets, in this particular quarter, whether it is China, whether it is Ukraine, and specifically Romania, because last year Romania was could not do well because we had a supply constraint, because we had that Qtr2 problem. And similarly, some new market like Brazil, and I think we have been performing quite well. So emerging market is performing well, and we remain bullish. And we'll see how much they really deliver.
Understood. Thank you so much, sir.
Thank you. The next question is from the line of Aishwarya Agarwal from Reliance Mutual Fund. Please go ahead.
Sir, can you please help us? When do we anticipate the court judgment on Suboxone? Any timeline?
So the hearing happened on October 4th, and the judgment should be there within 90 days. So technically, 90 days means 4th of January. But we can expect any time now onward before that date.
Sure. And sir, next is how you see this Novaring as well as Copaxone in the approval process, and where are we and when we are anticipating the launch?
As I mentioned in my presentation, for what we submitted all the required information, and we addressed the CRL that we got for both. Both of them are now on the normal regulatory track, and we feel that we can launch it within the time that we discussed last time, which means that on Novaring we said that it's going to be in the first half of calendar 2019, and the Copaxone in the second half of calendar 2019.
Sure. Thank you, sir. It's very helpful.
Thank you. Next question is from the line of Anubhav Agarwal from Credit Suisse. Please go ahead.
Yeah, thanks. Good evening. One question is on PSI segment. We have seen the sales increasing with this segment almost 11% sequentially. Question is, how much was of this price driven and how much was volume driven?
It's primarily volume driven.
So then what explains margins really shooting up for this segment sequentially from 22 to 28%? I understand the operating leverage, but incrementally almost 85-90% of sales has come as gross margin here, gross profits here.
It's a combination of product mix, and also we have a nice cost efficiency programs.
I'm sorry, you have nice what?
No, some impact of currency also will be there, Anubhav. Okay. It helps because primarily billing happens in dollar, but also it is the product mix which makes a lot of difference in PSI margin.
And cost efficiency programs.
Cost efficiency. So, but are we now? Is this product mix that we benefited this quarter? Is this a sustainable mix? So, should we? Because if I look back, of course, other than currency, we have never done sustainably more than 25% gross margin here. So that's why I'm asking that: is this a one-off benefit that we're seeing in PSI segment, or this is a new base for us?
See, in PSI earlier also I have said there will be fluctuations. It is 28 has not been the highest. Sometimes even we have done 30% in a quarter. So it is so dependent in terms of the product mix, and if there is say more development quantity, then definitely it shoots up. So there are multiple factors. In this particular thing, there is an impact of currency as well. So depending on where the currency stabilizes, and that will also have an impact on the margin. So sustainability cannot be assured, but obviously always the attempt within the company will be to increase the margin as much as possible.
That's helpful, Swami. So one question is on R&D. You mentioned about R&D being almost similar to last year here, but directionally, can you talk about roughly about fiscal 20 roughly? Can we think when you guys try to consider biologics and proprietary business living on their own, can we think about R&D which is, let's say, 1,700 to 1,800 crore this year and last year? If fiscal 20, can we bring it down to less than 1,500 crore? Or what will happen as
I will talk about next year in the next quarter.
No, I was not looking for quantitative number, but I was just looking for, let's say, directionally that we guys need to increase our spend on specialty. That's, you guys have talked about that earlier. And you also mentioned that the 60% that you're spending on generic needs to come down going forward, right? So that means that...
Proportion.
So the spend on specialty has to increase.
I have not alluded to an absolute. Let us make few points clear. R&D is our primary lever for future growth, and we will never trade off that. We will continue to focus on R&D. Our activity level on R&D has not come down a bit, but we are trying to improve the R&D productivity. So that's why there will be some advantage we will get in the overall spend without trading off anything on R&D. You are right. Going forward, there could be more spend towards specialty and biosimilar side. To that extent, the proportion of overall R&D can get skewed in favor of that compared to the generics and API. Having said that, we will continue even in the generics and API to spend wherever there are opportunities or potential which is available.
Sure. That's helpful. Thank you very much.
Thank you. Next question is from the line of Namish Mehta from Research Delta Advisors. Please go ahead.
Yeah, thanks for taking the question. So a couple of questions. One is, how much do you think is going to be the, cost efficiency or cost decline due to the various facility hang-offs that we have done annually on an annualized basis?
Can you repeat the question once more? You are talking about the facility divestment?
Yeah, due to the facility divestment, how much is the annual cost likely to come down? And when will it start, getting reflected in the numbers?
We cannot give you a specific number at this point of time, but definitely it will, bring down our overall cost. Maybe going forward, next time onwards, we can give some flavor.
So no ballpark also is possible?
Not at this point of time. We are in the midst, right? As you know, even in this quarter, specifically in October, we have signed a definitive agreement for our CTO4 facility from JD Metla. So we are focusing on closing that agreement as well. So with all these being over, we will definitely, by the time we prepare the business plan for next year, we'll have a clear idea about what is the, savings in our cost structure due to all the actions that we have taken during the year.
Okay. The other thing I just wanted to know, correct me if my understanding is wrong, we have just in this second quarter, we ended the 180-day exclusivity on eloxy, that is the palanosectron. So just wanted to know, are we likely to see sharp decline? Obviously after 180 days, but what was the market share we attained during that 180 day? And what do you see now, likely to be the scenario given the competition after 180 days?
So, Nimish, on palanosectron, I think the market is already quite competitive. And incrementally, as of now, we don't have much visibility. We would not like to comment at this point in time. Let's wait for that. But I think at this point in time, it's quite competitive. And to a larger extent, it incorporates a lot of players already in the market.
What was the market share we attained in that 180 days? That you can tell me, that will be helpful.
So by August, we had around 26%, if I recall.
Yeah, so it's around then. But maybe on the specifics, we'll take it offline and maybe specifics.
Okay. Thank you very much.
Thank you. The next question is from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Hi, thanks. Eris, is it possible for you to spell out your plans for China and, how much can this business grow over the next 3-4 years?
So we don't want to share guidance, but we see a great opportunity as China is giving certain advantage for products that meet certain criteria. So if you meet those criteria on quality and speed, you can get access to hospitals in a different way than used to be in the past. And quite a large number of our global portfolio, actually around 65 to 70 products, are meeting those criteria, and naturally part of them we hope will bring that. This is a significant number over what we are selling in China right now.
Okay. And any clue or anything that you can suggest that what do these 65, 70 products, what sort of addressable market is it targeting? And second, would you necessarily take this through your joint venture route, or can you also do it 100% owned entity?
So I don't know the exact market access, but these are fairly large molecules. In the sense of some will go to the joint venture and some will go with the partners, depends on the ability to access the market, as the joint venture has certain therapeutic areas that they're working on, and other therapeutic areas we will use other partners.
Okay, great. Thanks. And second question is on DOADA, ongoing audit, and I know you can't speak too much, but the broad question is this audit only going on for onco site or also for the non-onco site?
At this stage, I cannot comment of where the audit is. We will wait until it will conclude and see that.
Okay, no worries. And just one final question. Is it possible for you to update us on your anti-psoriasis oral compound, which you had partnered with Xenoport?
Yeah, I can take that question. So you are referring to our product XP23829, which we had licensed from Xenoport for moderate to severe psoriasis. That product is currently in phase 2B studies, and the recruitment is going on right now. It's a blinded study, so we cannot have the data until the study is complete. We expect the study to complete by the late Q4, early Q1, late Q4 2019, FY19, or early Q1 FY20. At that point, we will make a decision about moving this product forward.
Okay. And if you do move it forward, it would necessarily go through phase 3?
That's correct. It will have to go through phase 3.
Okay. And then just curious, was it not already done phase 2 way back in September 2015, by the time when you in-licensed in March 2016?
Yeah. So it's a little bit of a technicality here. It had completed phase 2, but what we call a phase 2A. In other words, there was a proof of concept that was established at that point in time. And then we recognized that we could directly have gone into phase 3, but that would mean we are taking on a lot more risk and a significantly higher expenditure in terms of how we power the phase 3 study. So instead of the risk and the higher expenditure, we felt it is prudent for us to do a phase 2B study where we look at the dose response as well as the duration of the study so that we get a clear signal to power our phase 3 study, which then would be significantly more de-risked as well as will be much cheaper.
And it has taken you 2.5 years or almost 3 years by the time you ended? Isn't that too long for a phase 2B study?
Well, no. That's just the nature of the R&D on the proprietary side. So this is a 6-month study. So you have to follow up the patient for 6 months. So each patient has to go through that. This is a 400-patient study, 4 arms, 100 patients in each study, and monitored for 6 months before the blind is broken.
Yeah, that's fine. Sorry to persist on this. One final point from my side. So if you had, in-licensed in March 2016, and if the study is going to get over by middle of 2019, it's been 3 years since the product has been with you, and you took it after phase 2A, and phase 2B has taken 3 years.
Yeah.
I mean, why is that so?
There were a number of activities after we licensed the product. So we had to meet with the FDA to get concurrence from them. So, all of these take time. So to actually schedule a meeting with the FDA, put together a plan for both the phase 2B and the phase 3, get their concurrence, and then after that to get the product going, manufacturing of clinical material, and so on, that was the time.
Okay, great. Thank you so much. That's all from us.
Thank you. Before we take the next question, a reminder to participants, please limit your questions to 2 per participant. The next question is from the line of Sayan Mukherjee from Nomura Securities. Please go ahead.
Thanks. Sir, you mentioned about, the proprietary and biosimilar businesses being self-sustaining over a period of time. I understand they are not at this point, and we mentioned about increasing R&D spend. So in a way, what you're saying is in the near term, there would be even more revenue and cost mismatches in these businesses. So there seems to be some kind of a contradiction here. If you can help us understand what's the timeline you're thinking in terms of both these businesses breaking even?
Yeah, as we said, also we expect proprietary products to improve on the total revenue front, particularly now that DFN-02, the PDUFA date is in the quarter 4 of FY19. So we expect to launch in Q1 FY20. And that's a very significant product for proprietary product business, although it will take some time to ramp up. But we'll expect that also to give, revenue. And on a biologic side, as you know, in emerging India and emerging markets, we have the pipeline and we are launching. For example, in India now we have launched trastuzumab, and some of the emerging markets also will be followed up. So we expect the revenues also to come in as we are putting, some more, like in biosimilar, it will be basically for the developed market that we need to take a couple of products, which we will do ourselves, or we can even potentially sign up with a risk-reward kind of a sharing with someone else to do that. So all these we will see, and we'll come back to you in terms of timeline by the time we finalize our plan, and we'll give you an indication. But the goal that has been set is that how these two businesses can get self-sufficient at the earliest possible without taking several years. So that, is a complete planning exercise we'll have to do and then get back to you.
Okay. Sir, is it possible to share biosimilar revenues overall India plus EM or separately? Even approximate size of the business?
Yeah, around 180 crore that we get in Sana, why don't you share what is the thing?
Yeah, so it's roughly around, you can take 90 odd crores a quarter, so which kind of culminates to 350 odd crores of run rate between India and EM.
Okay, and approximate split if possible, Shravan?
Split, maybe I'll get back to you on this.
Okay, that's helpful. And just one last question on the EM where we are seeing good growth. And I think you mentioned about a few markets, but the growth that you're seeing today is I don't know whether you consolidate the China numbers, because you mentioned China also is doing well. And just wanted to have a clarity on that. And Brazil, where I think you started operations last year, revenues are quite small. What's the uptake we can expect in the Brazil institution business?
So first in China we have two stream of revenue. One out of the joint venture which we do not consolidate in our financial reporting. Only the profit comes. But there are some which is our direct, and that gets reflected in the sales. In Brazil, even though we started the operation only last year, there has been considerable growth even within a year, and we hope to improve going forward with new launches. But apart from China and Brazil, there are, as I indicated earlier, there have been other markets we have been doing well in emerging markets.
Okay, sir. Thanks, and I'll join back with you. Thanks.
Thank you.
Thank you. The next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah, thanks for this opportunity. So just, I believe in the opening remark you talked something about the product rationalization in US. So whether that is a kind of a continuing process or the sequential decline, what we are seeing, what portion of that is because of that, or how many products that we have curtailed. So any clarity on that would be useful.
So the main impact is on few products that got competition from other players. So it's not across the board, it's primarily on key products.
Okay. So that means whether the base business is getting impacted by this effort in any meaningful manner?
It's meaningful to those products, yes.
Okay. And just to one clarification about whether the financials include any forex gain for the quarter?
Absolutely, yes.
Yeah, can you please quantify that, sir? Because the finance income seems relatively bit higher the quarter.
So some part of the financial income will include the hedge gain, but as we said, we have divested the Totem brand, as well as we have got the other income will reflect that. So in the finance income, some part will be the hedge gain and some will be the interest income that we will be getting.
Okay, but you are not quantifying the forex gain or hedge gain?
We are not specifically putting now.
Okay. And just one more question on the, whether any benefit your PSI business has witnessed because of the Chinese supply disruption, what it has been there since some time. So either in terms of the prices or in terms of the volume, anything that you have witnessed in the quarter?
We absolutely see more engagement with us because of the Chinese situation, and we believe that strategically it's going to help us a lot.
Okay. Thank you. Wish you all the best.
Thank you so much.
Thank you. The next question is from the line of Shyam Srinivasan from Goldman Sachs. Please go ahead.
Hi, thank you. Good evening, and thank you for taking my question. First is on the U.S. Generic market right now. Did I get you right when you said if you adjust for Suboxone and take it out last quarter and this quarter, it was a single-digit decline? Is that what you said? I missed that. Sorry.
Yeah.
Yes.
Okay. So would that mean like an annual still low double-digit kind of an erosion in the environment? Because you seem to indicate price erosion in your press release at several points. So how are you seeing the market right now from a pricing standpoint?
So in general, it's stabilized. But when there is new approval that is hitting one of our products, then naturally we see the impact on that product. If the product is important, then naturally it's impact the overall basket.
Got it. And
so it's not so much from a price harmonization, it's more of a specific competition per product.
Got it. And you think the only way is like what you alluded in terms of more product launches, like the 10 to 15 additional products is the only way one can actually grow the U.S. business. It's at $200 million right now quarterly. And do you foresee that you will be able to kind of grow this sequentially now through the end of the year?
So we are not giving guidance. Long term, for sure, we are planning to grow. When I'm saying growth for us, it's primarily focused on growing the profit. So it's naturally launching products, but also our cost structure and the ability to increase share in our product. So it's a combination of the three.
Got it. Thank you. And my second question is on Revlimid. I think we have had IPR challenges that we put in sometime around August, if I recollect right. Can you give us an update on what's happening on the Revlimid side, please? Thanks.
Shyam, we will we can take this on offline basis.
Okay. Thank you so much.
Thank you. The next question is from the line of Kunal Dhamesha from SBI Cap Securities. Please go ahead.
Hi. Thanks for taking my question. So my first question pertains to growth in branded ROW business. So the growth has been solid. I think for 1H, if I count it, it's approximately 25% growth year on year. So, and our guidance is a low double digit till last quarter. So where do we stand in terms of guidance for the remaining year or on a consolidated FY19? Is this the new base that we are seeing in this business?
I don't want to give any new guidance in this respect. Overall, we are still with 2 digits. I don't recall we said lower. Maybe we did, but I don't recall that we mentioned the exact amount.
Okay. And just kind of following up on previous participant's question. So you said the pricing pressure in general, it has stabilized. So stabilized at what level, mid-single digit, high single digit in base business?
Stabilize is that whatever whatever RFPs that we filled, we are selling with the similar prices. But naturally, as you know well, some of the customers are issuing new RFPs, so I cannot comment on what prices will be those new RFPs. But let's say for whatever we filled, which is most of the customers, naturally we feel that these are the prices that we will continue to sell these products.
Okay. And just a follow-up, are you continuing to see, some rationalization from other players in the market, creating new opportunities for you?
Absolutely. Absolutely.
Okay,
we see that. And yeah, naturally, I believe that there will be continued rationalization in this market.
Okay. Thank you.
Thank you. Due to time constraints, we'll be able to take one last question. The last question is from the line of Anik Mitra from Stewart & Mackertish. Please go ahead.
Thanks for taking the question, sir. My first question is on Suboxone. Sir, what do you think, how do you see the opportunities ahead on the backdrop of favors India by US?
We couldn't get your questions. Can you repeat it, please?
We seem to have lost the line for Anik. We'll move to the next question. The next question is from the line of Ranveer Singh from Systematic Shares and Stock. Please go ahead.
Yeah, thanks for taking my question. Just one clarity. The news, your product DFA02, which was returned back to you. So just wanted to understand what is the status there. Are we going to out-license it again, or we will develop ourselves, or how important is for us?
Yeah, I'll take that question. Actually, it is not DFA02, it is DFA02.
Yeah.
Antibacterial, topical antibacterial combination. Yeah, so our plans are, it is certainly a very attractive product. Requires a phase 3 to be conducted by a partner. And we are actively seeking other partners, and we are getting some interest. So stay tuned.
So how important is it in terms of financials, if I talk about? So whether we are expecting some meaningful upfront or milestone payment out of this product, or
it is not,
yeah.
Yeah, it is hard to predict. As you know, with licensing deals, it depends on various factors. So it will be hard to predict what it would be, but our expectation is to get, for any deal, it doesn't, not just for the FAO2, our expectation is to get an upfront payment and pre-commercialization milestones and then royalties. That's a standard ask for any of our products.
Okay, fine. And secondly, our cost rationalization program, when we choose site to sell, what exactly is the criteria? Like we see that JD Betla API facility has been sold. So was that not profitable, or when we rank these facilities in terms of contribution and then we scrap the bottom one, this is the way we do, or what exactly, modus operandi or point to consider before doing this rationalization?
So naturally, we look at the products and the quantities that will be needed for the future. We look at the way to make them, and we see whether we can condense them in fewer lines and do it with less people. And we see which of the plants, the cost structure will not fit the new infrastructure that we need. And this site was selected based on that.
So this JD Betla, we assume that was not a big contributor to our revenue, right? Revenue or profit?
No, we sold products out of that site, and absolutely. But we feel that long term, it did not give us what we needed from that lines in the future.
Okay, fine. And the last, if I may, that in European market, I see that price erosion has been for quite some time. So, where we see this going to stabilize now?
So, you ask about Europe?
Europe, I am asking about.
It's naturally our baseline is relatively small at this stage and consisted of a few products. So it's more of a product to product case than anything. And naturally, most of our products is being sold as hospital tenders. So naturally, it depends on the tender.
So we can see now this rate getting stabilized going forward in subsequent quarters.
There are two things. First of all, we'll have more products, and we also suffer from execution issue, as we did not supply Europe all the products that they could sell, and we are absolutely working on changing that.
Okay. Fine, that's it from my side. Thanks a lot, sir.
Thank you very much. We'll take that as the last question. I would now like to hand the conference back to the management for closing comments.
Yeah, thank you all for joining the call. And in case if any of you have any additional queries, please feel free to get in touch with the Investor Relations team. We would be happy to address them. Thank you all.